My name is Mark Flickinger. I am General Partner and Chief Operating Officer here at BIP Capital. I'm really excited to share the Start of Startups in the Southeast report for this year with you all. Thank you for joining. We will send this deck out to everybody that registered. We do have a short disclaimer. We're talking about data that we looked at. We're predicting a few things in the future. We don't have a crystal ball. We don't know exactly what's going on, but this is how we see things as it stands today. So we'll go through a brief presentation, kind of breaking down the report. Some of you may have read it already. Some of you may not have read it yet. And then we'll open it up for questions. If you have questions, we'll have people type those questions in, get those questions over. I'll answer them to the best of my ability in the time that we have. But from an agenda perspective, first, we're just going to talk about what is the state of startups in the Southeast, how long we've been doing it, what does it entail, where's the data come from. Then we'll go through a couple of the key trends that we've pulled out of it: market context, deal flow, capital invested, sector stuff, things that people are really interested in terms of what's going on in the Southeast in general. We'll look at a couple of other things, and then we'll dive a little bit into the states just to see what's going on a state-by-state basis. Obviously, there's a tremendous amount of data in the report. We're not going to cover all of that in the next 20 minutes, but we're excited to dive in. So first up, let's talk about what is the State of Startups in the Southeast report. This is a report that we've been putting together since 2017. This is our 9th year reading the report. You can read all 9 reports if you'd like. We're going to only talk about 2025 today. But we really focused on 9 states in the Southeast. You can read them there in terms of how they're listed. Really, this cluster in the Southeast to see what's happening in the startup ecosystem of the Southeast. We do the report in a way where it's beneficial for both founders. You read it from a founder's perspective and also from investors. It's key for that to be a strong collaboration between founders and investors in order for that ecosystem to be successful. It's important to service providers, talent, also both experienced and new, as people figure out sort of where they want to deploy themselves, so to speak, and work in these different companies in the Southeast. I think overall the Southeast has been fairly robust, but often overlooked, less so now than it was 10 years ago before the report had started, but often overlooked. When we think about the venture ecosystem, we kind of talk about the country as a whole, but it's really focused on a couple of these key innovation centers like Silicon Valley, Boston, New York, et cetera. There's a lot going on in the Southeast, and that's the reason that we put this report together. For those that have not read it yet, it's kind of broken into a couple sections. The first section is really these trends that we're seeing. We can tease these trends out in the Southeast. We're going to go through those trends today. We then have our state-by-state data. You can click into each state, see what's going on in the state, see who's most active, what deals are being done, what sectors are areas of focus, et cetera. And then we have lists. Everyone loves the list. It's always great to see what unicorns are housed in the Southeast, what exits we've had recently, and what years those exits had, who's the most active across all 9 states, separately from who's active in each individual state. But there's lots of data in there for people to consume, and we'd love for you to go in and take a look in your own time. So there's 4 themes for this year, those kind of macro trends we pull out Southeast specific. And I think it's good for everyone to have context. So the one theme is always just what's going on? What's going on in terms of dollars deployed, deals being done, where are those particular things happening? So we'll get a little bit of context. We'll get into who's got the juice, who is getting the deals today. We recognize there are less deals and less capital being done now than there were just a couple of years ago. Well, some other unique trends in terms of the unit economics of businesses and what we're seeing. And then kind of this step back from what's happening in 2025 and really look in the broader context of this maturation of the ecosystem to see sort of where are we? Are we rebalanced? Are we out of whack in some particular way, et cetera? So let's jump in. First of all, let's just do context, like what's happening. Many of you who have followed this space for a number of years recognize that hump in the middle of the chart. That was zero interest rate COVID, right? That was 21 and 22. Like everywhere else in the United States, that was when dollars were free and deals were getting done. So you can see the most capital invested and the most number of deals being done. This is the Southeast in aggregate. The report is done over a 7.5-year period. So this is 2018 to 2025 data. And then we forecast the rest of 2025. So we're as current as we can be. We have data right up through 6/30 of 2025. And then we use our experience to sort of forecast what's going to happen through the rest of 2025. But I think what's interesting about this is if you draw a straight line from 2018 to 2025, you can see that we're kind of on trend, right? I think we have a dip in the number of deals that are being done in 2025. I'll come back to that in a minute. But on a dollars deployed basis, the line, you can see that that line continues to trend up. So yes, we had this aberration for a couple of years in 2021 and 2022, but the dollars that are being deployed in the Southeast continue to creep up every year after year after year. I think what we're seeing in 2025 is less deals are being done, even though we have more dollars being deployed, which shows a lean back towards more mature businesses. So you're starting to see more deals being done, higher valuations, higher amounts of capital being deployed per deal, which is why you can get a slight increase in capital deployed, but what is expected to be, so forecasted to be a lower deal count on an annual basis for 2025. So that's the context that we're operating in. Not perhaps surprising, but I think it's not that the sky is falling. That already happened. We already survived that in 2022 and 2023 when it did feel like the sky was falling and suddenly there's no capital anywhere and multiples were compressed, et cetera, if you're on the entrepreneurial side. But now I think it's more rebalanced, and I would expect us to continue to move forward with this maturation. I think the breakdown of how those deals are done, the size of those deals, et cetera, will change. But I do think that through time, the amount of capital being deployed in the Southeast should continue to go up, just given the resources, the success, the number of great companies that are being built here as we go through the next couple of years. The next question is who's got the juice? If those deals are being done and dollars are being deployed, where is it going? And I think it's probably no surprise to anyone that's been paying attention or has been operating in the Southeast for the past couple of years that the dominant sector is information technology. Information technology, all the definitions of these sectors are in the back of the report. But for those wondering what information technology is, it does include SaaS. So B2B software businesses are included in information technology. That's been sort of the strength and the hallmark of the Southeast for years. I've been here for 10 years. I've been doing this report for 9. And that's always the dominant sector. Almost every state sort of leads with this sort of B2B software and tech-enabled service solutions in the information technology space. Healthcare has always been strong. If you think about what's going on in the Triangle in North Carolina, Nashville, Atlanta, always a great place to build healthcare businesses. Healthcare has always been a strong second. And then from there, if you go state by state, it kind of bounces around and even in aggregate. But you can see B2B and B2C starting to move on. I think B2C is something to really keep an eye on. We'll move to this next slide here to really see. So this is in aggregate over the course of the time period studied, so 2018 to 2025. This is just the last 3 years. As you can see what's happened over 23, 24, 25. If you go back to this slide, keep people jumping around just a little bit, you can see that capital is relatively flat. It's gone a little bit up, 23, 24, expected to go up again in 2025. But where that capital is deployed is kind of moved around a little bit, right? So we continue to concentrate or focus in areas where we've had success as the Southeast in aggregate. That's in information technology. You can see that was already a dominant position or in a dominant position on a sector level in the Southeast in 2023. And it's extended that lead, if you will, through 24 and 25. I think this has to lean towards where we've had success in the past. Investors that have a company in their portfolio are leaning towards following on in those particular companies, areas where they know they can help or they've had success before. I think that's not a bad thing, right? We're kind of doubling down on areas where we've had success with information technology. I do think it's interesting to watch that there is sort of a slight growth in most of the other sectors. It's small, but there's growth in the other sectors. Healthcare had a good year or a big year in 2023, dropped back in 24. We're starting to see a little bit of a rebound. B2B and B2C, I think one thing to be interested to kind of keep an eye on in the Southeast in general is B2C. Historically, the Southeast has not done a lot of B2C companies, business to consumer, kind of building businesses where that end customer is a consumer. A lot of that has to do with kind of what's happening in the Southeast, what type of investors we've had, the Fortune 500 companies. They can all be customers, how they're concentrated in the Southeast, either with the headquarters or centers of excellence. But it's interesting to see sort of more investment into that B2C space. That obviously is a large sector. There's plenty of deals that are going on. That's not an area the Southeast is dominated. But I do think it's interesting to see sort of the growth with the B2C sector if you look at what's happened or in 25 thus far. And then the last one I would just point out is energy. This is not a space where we've spent a lot of time investing in energy, but with everything going on in AI, there's a need for energy. There's a lot of investment going into energy. I don't know if that will permeate into the Southeast. You can see some sort of small bets being made, less than $1 billion still in the energy sector, but it'll be good to keep an eye on that over the next couple of years as we're looking for ways to fund and fuel AI as we move forward. Speaking of AI, we have it in the title, this Thanks AI. A lot of that is applied AI. So a lot of these information technology, think software, SaaS businesses are now applying or using AI and applying it into their business model to make them more efficient, more effective, more successful, et cetera. And I think that's one of the reasons we're continuing to see more and more investment in the information technology space. This next one is just a really interesting observation. What we're graphing here is the dollars deployed, that's the orange, and then we're doing the valuation, so like the post-money valuation of these deals. And I think what's really interesting is that for large parts of it, they track each other. They just, as one goes up, the other one goes up. They kind of trend along together through the history of the report. So you can look at 2018, we have the Southeast on the left, and we have the United States in aggregate, or the total United States on the right. Two things that you very quickly can observe. One is that the US in general, which is mostly driven by the Silicon Valley first and foremost, but also New York, Boston, is more volatile. They just go up faster and they go down faster, sharper ups and downs. We covered that in last year's report, 2024. So you see a little bit smoother from a Southeast perspective as we kind of go up and down. But the other thing to note is that those have largely just moved together, right? So as dollars deployed goes up, valuations go up. And as dollar deploys go down, valuations go down. It's kind of basic supply and demand economics. If we have more capital, there's more competition to get deals done, you can drive price up, and vice versa. But what we've seen over the past couple of years is the first time that this illustration kind of inverts itself. And you can see that happened earlier in the US in whole, right? That kind of typically happens faster in these larger innovation centers, but they pressed into it. That means that dollars are going up, so the orange line is going up, but the valuations are going up much faster. These are average valuations. And so it's pretty easy to kind of draw a conclusion as to why, and it's AI. These billions and billions of dollars are being invested in AI infrastructure plays over the past couple of years, like OpenAI, et cetera, out on the West Coast. And that's going to drive the average up, right? So it may not pull the median up, but it's going to drive the average up in terms of the dollars, which is what we're looking at here. And so as that post-money, that average goes up, it's going up much faster than the amount of deals going on. I think you can't blame that all. You can't use the same rationale or explanation in the Southeast that you can use in the US as a whole. And the reason is we're not doing AI infrastructure investing in the Southeast. That's not an area of focus. It's not something that we're doing. But what we are doing is we're using AI. So AI infrastructure versus applied AI. We're in the applied AI game here in the Southeast. This is taking artificial intelligence and making our businesses better, more efficient, more effective, whether that is with the solution that you're offering to your clients in the market, or if it's just making your business better with sales motions, follow-up marketing, client success, et cetera. So the internal operations or your end product, both of them have an opportunity to be enhanced by AI. And I think we're doing the same thing in the Southeast. We are now investing in businesses that are slightly more mature. And that's why you're seeing not only dollars are going up, but we're seeing post-money, the average post-money valuation going up much faster than that. And there's this sort of lean, I wouldn't call it a flight, but I call it a lean towards more mature businesses with finite amount of capital or a limited amount of capital to deploy from an investor seat. We're deploying that capital in businesses that we know, and businesses that we know well, that have already gone through some proof points in terms of their growth, maturation, and traction. If you're a startup and you're just starting your business, that may sound like bad news. Same thing from an investor perspective. You're investing in earlier stage businesses, so call them Series A, Series B investments. That also may sound like a bad thing. I view it the other way. I view that as a huge opportunity for businesses and investors alike. Just because right now we're tilting towards more mature businesses, higher valuations, more dollars being deployed, doesn't mean that that all stays in Series D. I think as we bring more and more people into the ecosystem and have success across that ecosystem and across maturation of business, I think the opening or the opportunity in the Southeast still sits with those Series A, seed, Series A type companies for investors and founders alike to move forward. And I think if you didn't believe me, I think this is a great slide to actually show you that it's not that different than it was pre-bump, if you will, pre-COVID bump. What's interesting here is we're looking at the percentage of deals that are done based on the maturity of the company. So if you go all the way back to 2018, you can see that we're about a third, a third, a third, right? So if you kind of just break companies into early, mid, and late stage, and we define that as kind of seed through A, B and C, and then D plus. You can see back in 2018 and even in 2019, we were pretty much a third, a third, a third in the Southeast, right? So this sort of balanced approach, relatively even, kind of equal number of deals being done across the different phases of the company. Once a bunch of capital came flooding into the market, and that was the zero interest rate COVID kind of bump, if you will. A lot of investors in the Southeast were kind of forced down. Companies were moving around. There was a lot of distributed workforce, et cetera. But you can see that more deals ended up being done from a seed perspective, right? You can see that blue line creep in, get a greater percentage. That started in 21, but you can see that takes time. As you raise capital in those zero interest rates, that capital is typically deployed over 3+ years. So you're going to see that tail. And what I'm talking about here specifically is this line here, as this blue line goes down, you're seeing more and more capital deployed into earlier stage companies, seed and Series A. It makes sense that as capital leaves the market, so there's less people, there's less entrants in the market. We have about half as many investors in the private market space now than we did just a couple of years ago. That will take pressure off of investors forcing their capital or only deploying their capital into seed and Series A. And now they're starting to be able to go back to what I would call a more balanced approach, where we're doing a third, a third, a third again, right? So we're kind of from one end of the spectrum to the other. You can see from 2018, we're a third, a third, a third, and now in 2025, we're roughly back to the same place. And what's good about that, whether you're a seed company, Series A, D, et cetera, is that if you go back to there's more capital, albeit slight, but there's more capital in the Southeast now than there was back in 2018. And now we're doing it across all three kind of balanced again, regardless of the stage of your company, you're in a better environment to be supported. And so you're more supported if you're a seed company, you're still supportive if you're a seed company or Series A, but you're more supportive if you're B, C, D plus, et cetera. And I think that rebalancing of the ecosystem, if we can continue to increase the amount of capital being deployed, great companies being built, founded, et cetera, and capital being deployed, you're going to end up with a healthier ecosystem where businesses can start here, they can stay here, they have success here, they can exit here, whether that's to a financial or strategic, because we have more and more maturation throughout that entire ecosystem. So I think some great trends for us to see in the Southeast across the kind of first macro trends. The next part of the report, for those of you that have not read it, or even for those of you who have, is we go into these state-by-state trends, right? So across the 9 states that we look at, you can click on each one of those states and really dive into what's going on in that particular state, how those trends and momentums have been over the past 7.5 years. What are the top 3 areas of focus? Who are the top venture funds? Who are the top incubators? Who's the government-backed accelerators? You can see dollars deployed, deals deployed, et cetera. And it really runs the gamut. You really can't look at the Southeast and say, well, all these states operate the same. Florida has deployed the most capital, has a bunch of different innovation centers, the biggest being Miami and Tampa. But in Florida alone, over the 7.5 years studied, they've deployed, or about $40 billion, or just over $40 billion has been deployed in Florida. And there's a bunch of great companies that have been out there. There's a bunch of investors that are based there. There's been more investors that moved there during COVID. Where the focus moves around depending on which companies get the largest deals and kind of where the ecosystem is. The other end of the spectrum, you have Mississippi. In Mississippi, only a couple $100 million have been deployed over the past 7.5 years. That's not to say there aren't great businesses there, but their focus, their sectors are where they have success. In Mississippi is going to be vastly different than it is in neighboring Alabama, Georgia, et cetera. Other ecosystems that always consistently do well and kind of are less volatile to the swings of the market would be North Carolina. Again, a couple of ecosystems there, Charlotte, the Triangle, even on the coasts in Georgia. Georgia's an interesting state when you think about it, because most of the economic activity happens in Atlanta. And so kind of how greater Atlanta moves up and down, that really impacts Georgia from a state perspective. Not to say there aren't other areas where great businesses are being built, but the main kind of hub of the kind of innovation ecosystem in Georgia is based in one place, and that place is Atlanta. I think it's really interesting for people to dive in and really look at what's going on in their state. And I think what we've done a nice job in this report is an interactive report. When you go read it, you can click on being a founder and read through and say, well, what does this mean for me from a founder perspective? It's very easy to click on it and read it as an investor. What does it mean from an investor perspective? What's the lookout fors? What's the gotchas? What's the kind of, I'm building a certain type of business. It's a B2B business that focuses in fintech. Where should I go? Where are the most fintech deals being done? Where has success happened, both from dollars and deals, but also businesses that have exited? That may be a place, if you're agnostic to where you start, that is a great ecosystem for you to go start your business. And so I think diving in on the state-by-state trends allows you to go from, what we read in the paper, if we still read the paper, the digital paper, if we read in the digital paper, how venture capital in general has these big ups and downs and swings, and if it's a good time or a bad time, et cetera. This report allows you to look at the Southeast as its own ecosystem and how it's doing relative to the historical past, but also in that broader context of the country. But then you can dive in on a state-by-state list and say, hey, this is where I want to be. This is where I want to build. This is where I want to scale a business. I was asked on a panel just last week, what would you tell to someone who's thinking to start a business? Is this a good time or a bad time? Personal opinion is this is never a bad time to start a business. I think if there's a problem that needs to be solved and you're uniquely positioned to solve that problem, then you should endeavor, if you choose to, you should endeavor to do that whenever you are ready, not when the market's ready. I think timing the markets is something that probably gets you into more trouble than good. But I do think it's good for people to be aware of the environment they're operating in, whether they're existing company already had Series B, Series C money, or if they're a new company they're just about to launch. You should know what environment you're operating into. Right now we're in an environment where there is less capital than there was in 21 and 22, but there's not less capital than there was in 2018 and 2019. And so these business fundamentals never go out of style. It's important for you to know that you need to make proof points from period A to period B that allows you to raise more capital. I think it makes sense to take smaller amounts of capital to prove those proof points in a difficult environment. But it's an exciting time to be in the Southeast. It's an exciting time to be both an investor and a founder in the Southeast. And I really appreciate everyone joining today's webinar. If you have not read the report, you can scan this code. Easy way to get to it. You can also get it from our website, bipventures.vc. Go into our resources, and then you can click on State of Startups report. Easy to get to, easy to read. Hopefully you enjoyed as much as we have. So with that, we'll open it up for Q&A for the remaining amount of time that we have. So if anyone has a question, feel free to type that in, and we'll answer those questions in the order that they're asked. See if we get any questions here. They have to get connected from one platform to another platform. So waiting to see if any questions come in. No questions yet. Well, I'll just say that I really appreciate everyone's time and attention. It has been a lot of fun to put together the State of Startups report. Always a challenge. We start this report as soon as June 30th hits, sometimes a little bit before, just to make sure we're prepared. We use a lot of data from PitchBook. We aggregate that data. We complement it with other data sources that we're reading, plus our own internal knowledge. And it's interesting. Each year, there's different trends that come out that I think are worthwhile for everyone knowing and sharing. We went through a lot of those at a high level today. I certainly encourage you to go read the report. It should only take a couple of minutes. It's purpose built, so it's easy to consume. We're not asking you to read some 500 slide deck. It's engaging, interesting, exciting, and I hope a good resource and information will add great information for you as you move forward in your particular career. So without any questions, I'll just say thank you again for your time and attention today. If you have any questions, feel free to follow up with us. We're always accessible and happy to engage. And I hope you enjoy the report and have a great rest of your day. Thanks again, everyone. Take care.